Aaron Bassin from Bridgit. Welcome. Good to be with you.
Thank you very much, Peter. Thanks for having me today.
No worries. It's always great to meet with innovators, people that are trying to solve different problems, particularly in the lending space. We have such a world class lending and banking market, but there are inefficiencies. Tell us a little bit about bridging loans and the pain points that you came across when you were looking at that particular segment of the market.
Yeah, absolutely. So, firstly, just to set up who Bridgit is, we are a specialist non bank lender which allows Australians to unlock the equity in their home. And bridging is a big part of that solution. So, traditionally, bridging has been very hard to access. And the alternative solutions around being able to buy your next property have been constrained because of limitations to access bridging finance. And so Bridgit has a solution that speeds up that process, makes it much more accessible, much more flexible to allow people to buy a new home before they've sold their existing home. Traditionally, Australians will try and sell first, which means that you need to find temporary living situations which are expensive, they take time, the market moves, and you can miss out on that dream home. And so bridging finance really is a great solution for those who want to act now on their dream home before they've sold their existing property.
Because there are so many examples where people have sold their home to fund a purchase,
That's right.
but then you find yourself out of the market runs, and then a lot of people can't get back in,
That's
right?
right.
They miss the boat.
Yeah.
So how does this address that? Let's run through kind of how the product actually works
Yeah.
and how in this scenario I would practically use your product.
Yeah, sure. So, Peter, you would most likely work with one of your mortgage brokers where Bridget is on the panel for. You would tell your broker that you're looking to buy your next home. And that broker will provide options to you, one of which will be Bridget. And so once you've identified that property that you want to buy, Bridget will give you a conditional approval to buy that property based on the equity you have in your home. So, for example, let's say you're looking to buy a $2 million property today, and your current property has $1 million of equity. Bridget will leverage the equity in your current home and finance the purchase of your new home all through one seamless solution. And that gives you the confidence now to go to that auction or and take that property off the market before it goes to auction. It is a solution that gives speed and confidence to be able to buy that property before you've sold. Once you've purchased that new home, now you can enjoy and take the time to sell your current house on your terms. You may want additional funds to improve the property with cosmetic renovations or to stage it or to time it in the right part of the property cycle. And as you previously mentioned, the market moves quickly. Over the last 25 years, the property market has increased on average by 8% per annum. Over the last 10 years, it's increased by 50%. So you're almost better off buying first and waiting to sell your current property whilst the property market continues to increase.
How long do I have to sell? Is it a forever thing or is it timed?
There is a time. So our loans go up to 12 months. But if you look at the typical property market cycle and the data in Australia, it takes about 32 days on average to sell your property once it's on the market.
Yeah.
Plus a 42-day settlement, which is pretty average. Yes, some Australians can negotiate longer or shorter settlement periods. When you look at that in total, it's about 3 months maximum.
So you can buy the new one, move in, come out of the old one, do a new renos, keep the real estate agent happy while they stage it and take their time. And then you've still potentially got another 6 months or so up your sleeve.
That's right.
Okay.
Right.
Tell me why the existing offering on the market wasn't compelling enough for you to create a new product.
So since the Royal Commission in 2016, the banks decided to pull away from a lot of different type of lending. Their focus is on their core 30-year home loan product. So similar products like bridging were pulled away by the banks. That includes personal loans, car finance, and bridging is one of those categories. And they make it incredibly hard for you to fit as a customer in that little box. And because of the hoops Australians need to jump through, I saw a gap in the market where if we provide a dedicated solution to our customers, that is flexible and all encompassing, we would be quite a successful business. And that has proven true. So the banks are not focusing on these alternate strategies. Their focus is 30-year home loans. That's 99% of their business. And then if you look at the customers who need bridging, the market is split in two core customer segments. So firstly, it's the downsizer market, and secondly, it's the upsizer market. If you're downsizing, after you bridge, you're not left with a residual debt. Therefore, you're no longer a customer to the bank. And all the work that they put into underwriting and approving that deal is not meaningful economically for them if you're downsizing.
Gotcha.
Takes a bank about 3 to 5 years to break even on a 30-year home loan.
So you've got a $2 million house in Sydney. You want to buy a $1.5 million apartment. And you know, as a downsizer, you're going to, if you borrow, you're going to buy that apartment, but then clear it out straight away.
Straight away.
So the bank says, you know what, don't bother. We're not interested.
That's right.
Because we're going to lose money on you,
That's right?
Whereas this is a more of a convenience product that comes in. How big is the downsizer market? We see it in our business,
Yeah.
just how missed it is, you know, the aging demographics and the needs of the downsizer market. How big is it from what you're seeing?
Yeah. So over the next 5 years, we estimate with other external data sources, 1.6 million homes will downsize in the next 5 years. It's a huge part of our industry and the Australian landscape. And having access to a product like Bridgit will help solve some of the housing supply issues. We've got this aging population. They want to stay in their homes for longer. They don't want to move to retirement facilities or aged care. They want to be in their own homes. So having access to a solution that helps them downsize will inevitably free up supply for new people to buy into the market. And we think that's an amazing outcome.
One of the segments that we focus on is the brand new market, and the stock being developed in the brand new market is changing.
Yeah.
It's not just going to a 1-bedroom or an owner occupier, but now the 3 bedrooms in play, because the downsizer is moving from a house into a 3-bedroom apartment where they want that extra room for the children or the grandchildren. They have a lot of sentimental value in their furniture. How big is the shift towards apartments from houses from your vantage point in terms of the product? Are downsizers going from homes to apartments or from homes to smaller homes?
So we see that actually being quite evenly distributed. About 80% of our lending is on homes. And that just represents the appeal of the Australian consumer. When we look deeply into the downsizer market, 50% of downsizers will be moving into apartments.
Wow.
And the other 50% into homes. It's all about lifestyle. They want to have less maintenance, less upkeep. They want flexibility. So if you think about managing another house,
Yeah.
you still have to do all of the gardening and the bins and all of that stuff yourself.
Yeah.
And that's no longer becoming an appeal.
An amenity too, right? Whereas you could drive or you could walk longer distances. The older you get, you want to be close to the supermarket, the post
Absolutely.
office, the cafe, the restaurant, and all those exciting things. All entrepreneurial journeys start off with personal experiences. I want to hear more about what triggered you to come down this path. What happened in your life to have that aha moment where, you know, bridging came on the table at the top of your list?
Yeah. It's not a short story, so
That's all right. We've got time.
yeah. I'm a first generation Australian. My parents immigrated from Ukraine, and they chased the great Australian dream of home ownership. And it was very difficult for them coming to the country without being able to speak the language, without having the qualifications to really excel in any corporate career. But they knew that they wanted that Australian dream of having a home to raise a family. And so when we were growing up and we were renting, the discussion always around the dinner table was about the property market. What is it doing? How is it changing? And so from a very early age, that was an obsession of mine, was just understanding and being around and surrounded by the property market. I then started a career in banking and finance. I worked at Morgan Stanley. I worked at Deloitte and KPMG. And that experience, it accumulated to the ability to then work in the fintech industry for another listed non-bank lender. And that gave me a deep appreciation of how technology can influence financial services and give people access to products that are technology driven. once I felt I had enough experience under my own belt, that entrepreneurial passion of mine to combine with property was something that I needed to achieve for myself. So I made the big bold step to go and start my own business whilst my wife was pregnant with our first child. So that was quite a interesting landscape to enter into, but I haven't looked back a second. I just wanted to find a way how to combine property with technology, and I saw that this gap needed a solution.
That's a really interesting story and well done. I think a lot of entrepreneurial journeys do start out in the less than ideal
Yeah.
situations. I remember starting my business with 3 kids under 3.
Wow.
And, that kind of forms you. That
Yeah.
kind of gives you the basis and the drive and the motivation. I want to go back to talking property, migrant families. A lot of migrant families do talk property around the dinner table, around weekends. You talk about it with your relatives, your cousins, your friends, your neighbors. With that in mind, what are you seeing in the market? So separate to Bridgit, now you as a property investor or you being in property, what are
Yes.
you vibing in the market and what particular trends are you seeing that are interesting to you?
Outside of Bridget, we're seeing a lot of interesting data, um, specifically with the move from non-metro to metro migration. During COVID, we saw, because of flexible working arrangements, there was a huge demand and price increase in non-metro areas.
Hmm.
People wanted to live where lifestyle and flexibility was at their forefront. Now, in today's environment, 2025, a lot of employers are changing the way that they work and requiring people to move back into in office time spent. And so, because of that, we're now seeing non metro prices come down
Yeah.
as people are moving back into the CBD. That's been a big trend. We're also seeing a lot more downsizing, right? That's been a big driver.
Are the downsizers moving to lifestyle areas or are they downsizing in metro?
They're downsizing in metro.
So even
Yeah,
the downsizers are
they
staying. So
are.
you've got those that left that are coming back, and you've got those that are downsizing, staying in, and then that means metro starts to really pump,
That's
right?
right. Yeah. And now we're expecting interest rates to start coming down this year. Most banks are predicting about an 80 basis point reduction by the end of the year, calendar year 2025. So when you combine that with the demand of the metro and CBD areas with the reduction in pricing, reduction in interest rates, I expect that the price for stock is going to start to increase exponentially this year.
Now, I'm a Sydney snob, and I'm proud of it. I live in the most beautiful part of Sydney, and I am very Sydney focused. But from your vantage point, are you kind of seeing anything in other states around that shift, or is it still regional to metro? For example, Melbourne was a big prison during COVID, and a lot of people left Victoria and went to Queensland, for example. Is some of that starting to come back, or is it that's set? That's too big of a
Yeah.
shift back.
Yeah, so from my vantage point, we're still seeing a huge migration across to Queensland.
Yep.
The property market there is very active. Prices are going up. Stock is very limited. Similarly, Perth and Adelaide.
Oh, really?
Those markets are very, very hot right now. You can't sell your property fast enough.
Wow.
As soon as it goes on the market, it's sold within a few days in Adelaide and Perth. And that's where we're finding the solution for bridging is actually really important, because if you haven't already bought your next
Mm.
house, if you're putting your property on the market now, you will not really have a viable solution of where to live if you sell,
Yeah, wow.
because it's going to sell very quickly.
Plus, if you're migrating from Melbourne to Perth, you need something to go into,
That's
right? You
right.
don't want to uproot your life going to temporary accommodation and then not understand it.
That's
So
right.
people are buying before they're actually selling.
That's right.
Australia's housing market, we do have a chronic housing shortage. You're a really smart guy. You've got a great vantage point. You're working in a really interesting, innovative environment. What are we doing wrong? As a country, we need to be building at least 180,000 properties a year. We're not. From your perspective, what's the missing piece? What do we really need to do to get the show back on the road?
Yeah. Look, I think there's no silver bullet and it will take time, but I think we need better government reforms into the construction industry. We have a shortage of skilled labor
Mhm.
to support the demand in construction. And I think we've over-regulated. But that is a tricky area to play in because some of that regulation is really important to protect consumers from buying from dodgy developers
Yep.
or buying poor quality products. But I think the government has gone a little bit too extreme, which is slowing down approval processes, slowing down planning, adding a lot of costs in terms of that entire process. And as a result, we can't keep up. So that whole industry needs to be reviewed by the government in terms of the entire process for approval, certifications, planning, everything. It's just making things a lot more, uh, a lot slower than it needs to be.
And how much does that weigh on the innovative part of the economy? I mean, young guys that are hungry, guys and girls that are hungry and looking for opportunity to solve these problems, when that lack of political will or lack of legislations there, how bad is that for innovation?
It's awful. It really stagnates the economy. If you think about the backbone of the Australian economy, it is the property market. And so we don't want it to stagnate. We don't want to be creating inefficiencies and inequality. People who are already in the property market have a lot more freedom and flexibility to continue to access it. We have to think about the next generations and the first home buyers. And that problem at the moment, I can't really see a solution out of that unless the government is stepping in to have a hard review of housing supply and regulation.
I totally agree. And from our vantage point, we work with a lot of developers in the brand new market, and it's not getting better. I say to people that a lot of the developer sentiment is not improving. Feasibilities are getting harder to stack up. Construction costs have alleviated a little bit, but they're not that much better. The gap between a brand new property and an existing property is still too big. The only real thing that I think's changed sentiment over the past few months is some of the stamp duty reforms in Victoria, but they're not enough. There needs to be more, particularly on the policy front. So hopefully, with an election coming up, that does get put on
Mm,
the agenda because this election needs to be a housing election. It needs
yes.
to be a property election. Now, as a leader, what have you learnt about yourself? As a young dad starting a business, building a successful business that's now scaling, what have you learnt about yourself?
It's a great question. I've learned a lot. You get really challenged and pushed into different circumstances that you would have never imagined. Um, I think I've learned a lot about restraint, patience, empathy. I think the most important part of being a leader is listening and understanding people. We've got over 50 people in the business today, and no one is the same. Everyone requires a unique approach. And so having the empathy and the foresight to spend time with staff and understand, what drives them, how to work with them on their individual basis has been a huge learning experience for me and very successful outcome to be able to tailor my approach with different people in the business.
Well, good on you. We wish you all the best. We need more innovation in
Thank
this
you.
space. Hopefully, the fintech space, particularly in property, starts to grow. And if somebody is watching this and falls into one of those use cases, do you take direct customers or are it all
Yes,
through broker
yes,
channel?
we do. We take direct customers. 95% of our business is through broker, but anyone is welcome to access us directly. We prefer working with our brokers. They are a free service to all Australians. They're a qualified professional advisor, and they will always have you back.
Awesome. Thank you and all the best.
Thank you.